How you doing, guys? Welcome to the Week in Review. It's your buddy Uncle Bruce for Saturday, February the 5th, 2022. I'm still trying to recover from the week. I don't know how you guys are doing if you're trying to recover. What a crazy week. Unbelievably highs, the lows, Howard Cosell used to say, the ebb and the flow, and the highs and the lows, the drama. Unbelievable. What a week it was. Just amazing. We had good news, bad news, good news, bad news, surprises, good surprises, bad surprises, just insanity. Let me show you a couple of I put together a couple of things here for you to look at. You know, you could look at this face for the whole presentation, but do you want to do that? I don't think so. So I thought I would, just grab a screenshot here. I believe what we have here is the Dow Jones Industrial Average for the week. Notice on the bottom left, January 31, Feb 1, Feb 2, 3, and 4. That would be Monday, Tuesday, Wednesday, Thursday, and Friday. And you can see how the Dow began the week with a climb on Monday because we had a very nice close last week on Friday. And the follow through continued with the Dow gaining points. And look at Tuesday, February the 1st, it went higher yet again. And so did the S&P and NASDAQ. We continued rolling along. And on Wednesday, we had another fabulous day. And the reason Wednesday was so good was because Tuesday night, Apple came out with their results and blew the street away with fantastic results. Absolutely fabulous. Our friends at Apple came through. And Wednesday, at the end of the trading day, Wednesday night, we were at a very nice level here into the 35 plus thousand level, 35,500 and more. Now, Thursday morning, oh my, we thought the world had come to an end because Facebook on Wednesday night, they came out with their numbers, and what a disaster, just a disaster. If I recall, I might have a chart for you. Let me take a look. There's Apple right there. That's the Apple chart for the week. Monday, Tuesday, Wednesday, the stock was up at 325, and look at what happened on Thursday to Apple shares, or Meta platforms as they want to be called now. I think they should change their name back to Apple if I were them. Look at that chart, and recovery on Friday? No recovery on Friday. What a disaster for the week there. Unreal. But then, to shock us all, look at that was Thursday. Look at Friday's market. We recovered. We had the down dip Friday morning there on February the 4th. Right off the bat, we were down several hundred points. And then the rally came on until about the last half hour. And I'm going to ask you to kind of ignore the last half hour, because that last half hour, in my humble opinion, was nothing but computer organized algorithmic trading where hedge funds were taking profits and doing technical trades. But to be fair, the Dow did lose 21 points on Friday. It was a down day. So from a technical point of view, you got the negative. But the practical point of view, where we live in the real world, the market went up and most stocks stayed higher at the end of it all. We got the recovery shot from another stock, Amazon. Look at Amazon on Monday, Tuesday, and Wednesday, sitting around 3,000 a share, 29 something a share. Thursday, we took the dump because on Thursday, Amazon reacted in sympathy to Apple. And a lot of the market joined Apple in sympathy, going, oh God, it's over. Apple made money, but everyone else lost money. This earnings thing is crapped out. The supply chain thing is crapped out. There's really going to be a depression, a recession. It's going to be terrible. And then Thursday night, Amazon comes out with record profits. Unbelievable. Look at the chart for Friday, right up $400 or $500 a share, like $400+ a share during the day. We closed at just around 31.50. We were at 3,200 a share for a good chunk of the afternoon here, and I suspect on Monday we may be right back to 3,200 a share on Amazon. What an incredible week we've had this week. I mean, winners, losers, in-betweeners. I'm just talking about the big boys. I'm talking about the multi-trillion, like the trillion-dollar companies. I'm not even talking about SPACs or anything like that. Ridiculous. We had the best week of the year for the three major indexes: S&P 500, Dow Jones, and the Nasdaq. The Dow ended up adding 1.1% for the week. First gain this year. S&P gained 1.5%, and Nasdaq up 2.4. I guess we had a little bit from last week. We had a good day Friday, but we still had a down week last week. But we've added to the gains. All right, so Nasdaq with a 2.4% gain is the best performing index, but it was the worst performing index going into this week. So it had the most to recover, and it did. The U.S. 10-year Treasury note closed out the week at 1.93%. And again, there are these doomsdayers out there thinking, oh, we're back to the 70s and the 80s. We're going to go to 20% interest rates. I mean, just out of reality in every angle can imaginable. These are what I call classic clickbaiters. In the YouTube world, we call people like that clickbaiters. They have the big headline. They want you to read their little article, and all they're hoping you do is that through osmosis, your eyeball, which is reading the article over here and over here, sees all the logos from all their advertisers. And that's all they're doing, clickbait. They're just trying to get eyeballs onto corporate logos to make money. The content is junk, and it is incomplete. It is lazy reporting. It is misleading, and it serves no bloody purpose whatsoever. But that's just this old man talking. Jobs report was higher than expected on Friday. That added to the market. It's a good news, bad news story, you know. It really is. Had the jobs report come out, and the United States had lost 400,000 jobs in December, and they revised, or so for January, and they revised December down as well. Had they done that, the talk would have turned that, oh, we can't raise interest rates. We can't raise interest rates on a weakening economy. I mean, unemployment is rising. But that didn't happen. The unemployment rate went seasonally adjusted. It's better. Technically, I think they raised it a slight bit, just technically to 4%, but it's still nothing. That's full employment in the real world. You all know, and I know, you go anywhere in the US and Canada, just in North America, you go to any McDonald's, any Wendy's, any most shopping malls, walk up and down the malls. Are there help wanted signs in all the retail stores? Yes. That means there are jobs available for people part-time and full-time. If there weren't jobs available in retail or in the service area like restaurants, then there might have only been jobs in the industrial area. But no, there's jobs available everywhere. Have you taken a drive through town lately? Do you drive by a muffler shop? Help wanted. Do you drive by gas stations? Help wanted. Do you drive by any retail operation and then go into the industrial part of town, and you'll find help wanted banners outside factories and distribution centers? Amazon is hiring. On and on it goes. More jobs available. Great. No recession coming. Jobs available. No recession. It's not like people have to line up at the unemployment office to collect checks. God, no, they don't have to do that. They're going to be able to go to their employers, negotiate some pretty nice terms and conditions for employment, and be gainfully employed, which is what people want. They'd rather be employed. A lot of folks, of course, don't want to be working at a factory. They don't want to be working at a Starbucks or a McDonald's. They want to work from home. And if they have the skills, they can find the job to work from home. And I say, God bless them for it. A couple of other notes. Google had, as I said, huge profits this week as well. They did a 20-for-1 stock split announcement. That stock is going to stay high. Of course, Amazon with a 13.5% rise just on the one day alone. Snap, a little company called Snap, 58% jump on their stock yesterday because of earnings beat, because they too weren't getting caught in the Facebook vortex. Facebook down 20% on Thursday after major earnings disappointment. Apple on Tuesday, massive surprise. A massive, no, not surprise. Massive confirmation of the fact that for the last year running, Apple has been setting records, earning records every quarter. And the shareholders have been dragged kicking and screaming higher with Apple on a whole overall basis. And it's going to continue. The morale will continue to improve because Apple will continue to make more money every quarter, whether you like it or not. And that is a fantastic thing. Bad news this week, crude oil hit a new high of $93 a barrel this week. That's 7 straight weeks of gains. And that is crimping or hurting inflation, crimping earnings, taking our pay raises away from us if we're driving a gas guzzler. The 10-year note, I've talked about that. The Dow and all the indices went up, and we had the best week of the year. Haven't even talked about GameStop. I haven't even talked about our favorite stocks out there. Haven't been able to get around to it. We had our fun times there too. Obviously, these shares, GameStop and our friends at Matterport and SoFi and Rocket Lab and on and on and on. 23andMe, Spire, ATIP, SmartRent, Sexter. What a crazy week they've had. They were following the big markets, trying to figure out what were you guys going to, so we can figure out where the hell we're going. And a lot of investors were going, well, if the Dow's dropping and the Amazon is dropping and S&P 500 is dropping, I got to get out of all my SPACs. I mean, that's the direct connection. No, it's not the right move, but people were figuring it was. And so they bailed on their SPACs, and then they piled back in, and then they didn't know what to do. And generally speaking, the SPACs on Friday had another okay day. They were recovering somewhat. They're not back to where they were, and they're not back to where I want them. I'll give you that. What's coming up next? More earnings will come out this week for the S&P 500. The majority of the S&P 500s will be reported. We'll have all the reports done and releases done through this month. A number of SPACs will start coming out with their results. But the big boys have spoken, and we now know that Google, and we now know that Apple, and we know Amazon are firing on all cylinders incredibly and are making investors a lot of money. And these companies are buying back their stock. For the SPACs, what they have to do is, former SPACs that we follow, what they have to do is come out to the public, tell us how they're doing, compare where they were a year ago to where they are today, a quarter ago to today, and show us what the upside's all about. And the good news is that in general, these SPACs corporately are growing. They're absolutely growing their client base, and they're growing their, in some cases, their subscribers, which will give them long-term monthly income. Like a company like, for example, SmartRent, they sign up landlords, they sign up property owners for their product, which they install in their units. So you might have a 300 condo unit project. Every unit has a SmartRent system inside each of the condos, and they're paying a monthly fee for the services that SmartRent offers. Well, these are multi-year commitments to SmartRent, which allows SmartRent to recoup all of their costs to install these new systems within the first 6 months to a year of operating. And then after that, it's all pure profit, less the cost of maintaining and operating their system. And it's a volume business. It's a simple thing. You keep adding 300 units here, 200 here, 100 here, 500 here, 800 here, all over the US, all over the globe. And you have your IT departments monitoring all of these entities. It's all done by artificial intelligence. The cost per unit drops and drops and drops. And the cost to maintain all the units keeps dropping on a volume basis. And this is how McDonald's works with billions served. You don't get to charge $25 for a Big Mac. You sell the Big Mac for a cheap price, but you sell a lot of them. Well, with SmartRent, you service a lot of properties, and they are adding them left, right, and center. And insurance companies are telling property owners, you want a better quote on your property insurance rates? You install SmartRent, because SmartRent is monitoring these properties And one of the things they're monitoring for something known as water damage. If a pipe leaks, it will detect this, and the alerts go out instantly that we have a problem in unit number 107 over here, and we can get people over there to stop the water leak, which stops damages, which saves thousands, if not tens of thousands of dollars in damages to either the unit itself or units under that unit as the water drains down to every apartment underneath the first one or condo. Um, SmartRent is going to become extremely profitable because it's going to be utilized like a utility. It's going to be kind of like a security system. You got to have it. It is a security system, and it is a Sentry system. It is an entire efficiency system. Anyway, that's enough on SmartRent. Sextera, server farms, man, server farms. Do you think, really, honestly, do you think that in the future, in the next year or two or three, that we're going to have less digital information about us and our buying habits and our lifestyle habits, or more? I mean, come on. And do you think corporate America, Canada, corporate Europe, corporate Asia, I think they're going back to the pen and paper, to go back to doing the books the old-fashioned way? No, it's all going to be online. It's all going to the satellites and back now. And Sixtera will continue to grow their business, and they will grow their server farm locations. And sooner or later, the street will figure it out. The company is going to do very, very well. ATIP, physical therapy. How many people have delayed physical therapy and need it badly? Yeah, we got catching up to do here. ATIP is going to be incredibly busy. Spire Global, launching satellites to track data for Sextera. Yeah, that makes sense. Yes, Spire will continue to grow. And of course, Spire is signing up deals with NASA, the European Space Agency, and others for all kinds of satellite services, including tracking forest fires. How about that one? Forest fires, marine traffic, storm systems around the world, all through Spire and its incredible number of satellites. Yeah, this is unbelievable. 23andMe, yeah, we all know about vaccines and medicines and cancer cures and liver disease and kidney disease and all. Yeah, they'll be fine. Stock will reflect eventually. Matterport, oh my God, Matterport. The world is going 3D. We know it. We see it. We're already experiencing it. The stock market today, this week, punished Matterport because their name was associated with Facebook in one way or another. And that probably hurt it. That will end rather shortly when the analysts come out and go, hey, no, 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 no. No, Matterport, Facebook, no, don't worry about that. Matterport, the future of 3D digitization, that's what you want to zoom in on. That's what you want to concentrate on. The upside for Matterport is phenomenal, but what can I say? That's at 8:38 on Friday night. SoFi Technologies. Oh, my. The bank charter has come in. The Super Bowl is this Sunday. We're 8 days away from the Super Bowl. Lots of press and a lot of promotion from SoFi will continue to come on. My gosh. The numbers will come out March 1. We got a ways to go here, and I think we will. And then there's Rocket Lab, getting those satellites into space in the first place. This is one of those companies that has an order book a mile long. They just announced a 20,000 square foot facility to enhance their rocket production in Colorado. It's guaranteed winner. Absolutely, these are just winners. They're corporate winners. Every one of them. They're all corporate winners. They're just unfortunately publicly traded companies right now in the middle of a market that doesn't know what the hell it's doing, and watching a market that is gyrating from minute to minute, day to day, week to week. I mean, my God, what's going on? Here is the Dow Jones for the week one more time. Take a look at Monday, Tuesday, Wednesday, and then Thursday and Friday. Folks, the highs on Wednesday will be breached with newer highs. This market will go higher yet again. This market will set new all-time highs in the not too distant future because the amount of cash desperately looking for a return is piling up. The pension money says piling up right now is just unfathomable trillions globally. It's unbelievable. And yeah, you can put your money into a 10-year treasury for the United States government. Go ahead, get your 1.93% interest, knock yourself out. Inflation's 5%. You've just locked in a 3% loss on your money this year, guaranteed. Are you happy with that? Are you going to go to your 4 million pension fund holders and say, hey, kids, we took all their pension money and bought U.S. treasuries, and you're all down 3% on your retirement savings? Are you going to do that? I don't think so. No, that's not how this game is played. These managers get paid on results, positive results, and that ain't a positive result. That's a negative result. That guarantees pension fund managers, hedge fund managers, and ETFs and mutual fund managers, it guarantees they get fired. That means they get dumped. They're going to be out of jobs if they go into just the bond market. You're toast. No, you cannot do that. You have to have stock. You have to have other instruments. You have to have ways to make a return. And like you folks, so many of you watching me now every day, Monday to Friday, whether you're watching me live or you're watching me on the rerun, more and more of you every week, you're telling me, you're letting me know, you're starting to write call options against your stocks. You've figured it out. You have been listening and watching this old man on this screen going, this thing about writing options, I got to look into this. And I mentioned one little thing that I'll tell you right now. I mentioned this, I think, a couple weeks ago. And one of my viewers sent me an email the other day saying, I took your advice and I did what you told me to do. What you told us. I did it. And oh my God, I can't believe how much money I could be making. And what was that? There are a number of you out there who are thinking about becoming option writers. Sell a contract, buy it back later for less money. But you don't know how to do it. You're nervous. You're not sure of yourselves. I get it. I totally get it. Every time you do anything for the first time, you're never sure. I've been telling you out there are a number of trading platforms out there where they would love to get your business. And if you want to be an option writer, they would love to have you as an option writer, whether you're writing options against stock you have, or you're buying a call option in the money and then writing an option against that option as a poor man covered call option. They're open for business. What they also offer you, though, are practice accounts. They give you accounts with pretend money. And they'll say, look, Jerry, Donna, here we go. Here's an account with $100,000 in it. It's a dollar number. And you can risk from 0 to 100,000 of this money in whatever trade you want on a pretend basis. You can literally play the stock market live using imaginary money. And you can enter and trades and write options and cover them up with this capital here, which costs you nothing, but it simulates the actual stock market in real time as it's really happening. And so if Uncle Bruce is telling you that you have an opportunity from time to time to write options and make a return on these instruments, you can try it right here without any risk whatsoever. Now, if you've got $20,000 that you can put into the market, into this thing, or 40,000 or 50,000 or whatever the amount you have, 5,000, 8,000, you can theoretically use that much capital inside this $100,000 example and only put to work the amount of capital you actually have. Because what some people do is that they fool themselves. They go, well, I got $15,000. I'm going to play with $100,000. That's not real life. You should only be playing with the $15,000 you've really got to play with in the example. So leave the other $85,000 alone and only work on the $15,000 you really have and see if you can make money doing what you want to be doing in the market. This is a very smart thing and a very wise thing to do if you're looking to get into option writing. Of course, as I've recommended, and I will keep recommending, you've got to learn it up, kids. You've got to invest in this, and you have to understand what it is you're doing. Of course, I'm suggesting one thing you can do is at least watch some of my courses on my website, stockmarketswithbruce.ca, not .com. .ca, stockmarketswithbruce.ca. Check out the classes. Number 11 was released I did it last Saturday. It was released this Tuesday, Wednesday. Lesson number 11 on how to write poor man covered calls. You can check out lesson number 8, lesson number 2, 3, 4, 5. There's all 11 of them, and they're $100 each. And you can watch them whenever you want, and you don't have to buy them all, and you don't have to watch them in order if you don't want to. You can rewatch them as many times as you want. You don't have to worry about taking notes and worrying about, oh, I forgot what he said. You can watch it again. And if you have any problems with the links, let me know with an email. I'll send you the link. Anyway, check out the lessons and become familiar with how stock options work and how you can write stock options against stock you have, or against ETFs, or using poor man covered calls. There are a million ways to do this, to write call options and score the shrinkage, as we like to say with Seinfeld, the shrinkage of the value of the contracts because of time. The clock's on your side. Use accounts, platforms where you can do trading, pretend trading, where it isn't even your money, and say, okay, Uncle Bruce, I'm watching you anyway on the computer. I'm watching you Monday to Friday. You're on every morning at 8:30 in the morning Eastern time for 3 hours. Then you're on at 3 o'clock in the afternoon for the last hour of the day. I watch you there, or at least I listen to you while I'm working. Theoretically, I'm working. I'm going to do some trades. When you say it might be time to write some call options against GameStop because it's taken a bit of a pop here, I'm going to write some call options as if I were doing it with real money. I'm going to do it in this platform. And I'm going to follow it just like you're saying. And I'm going to do stink offers and stink bids. And I'm going to learn all about this stuff because you've talked about this in your classes. I'll take your classes and learn all about stink offers and stink bids and poor man covered calls and how they work and how they depreciate. And I'm going to do this inside these practice accounts. I'm going to try this for a month. And at the end of the month, I'm going to take a look and see how it worked out. Because I have no idea whether I will be any good at it. And that is why these accounts exist. These platform trading firms with either Fidelity, TD Ameritrade, some like Webull and others, they're all different. You have to do your homework, which one you want to use. Check them out, find out which ones offer practice trading accounts, and then make sure that you can do what it is you want to do when you do it for real. And go from there. I have had emails from people who've said to me, Bruce, I did this. I wrote call options. I bought a in-the-money call option on Goldman Sachs, like you suggested, in the money. Then I wrote calls against those contracts. I bought one or two. I wrote one or two. Wrote them, put in stink bids to buy them back, got them, wrote again when the time was right again, when you said so. Put in stink bids, bought them back again. Gosh darn it, the heck, this works. I can't believe how much money this was generating on how little I have. And you didn't need $1 million. You didn't need $500,000. You don't need $100,000. You don't need $82,000 to do this. You can buy and sell call options. You can write call options against deep in the money call options. Like, for example, Cisco. You could probably buy a Cisco in the money contract for about $1,000. And then you can write an option against that option and bring in $100, $80, $200 over a few weeks. You think to yourself, if Bruce, why am I going through all these motions to make $80 to $120 on an option? I mean, it's not even worth my time, man. And I'm saying, hey, kid, you're using $1,000 and you're making $100 return in like a week and a half, 2 weeks on $100. If you could do that for the year, you're going to do this 20 times, 22 times a year. You're going to make $2,000 on 1,000. Who are you to tell me it's a waste of your time? If you are not happy making $2,000 with 1,000, you don't belong in the market. Get out of town. Watch somebody else. Go play games. You don't belong here. You're a child. $1,000 can make you $100 in a week or two on a conservative option writing strategy. Think about this, folks. I know a bunch of you out there are sitting there going, Bruce, I've got 40 grand in my 401k or my IRA, or I've saved dough. I got laid off from my job. I got furloughed. I got bought out. I've got $60,000 lying around. It's making 2% a year. I'm retiring in 15 years? I don't think so. How the hell am I going to retire in 15 years with only 60 grand saved up? This is not happening. I'm destined to be a worker until I die. I need another form of income on top of what I'm generating because I got to catch up with my retirement planning needs because I've missed out on all kinds of stuff. And it's not your fault sometimes. Mostly it isn't your fault. It's the economy, it's family situations, tragedies, unforeseen circumstances, whatever it is. Maybe there's a way you can bring income in from a secondary source that can change and accelerate your financial life, improve your financial life. And this might be it. Might not, but it might be. And if you can try it for free through existing platform trading entities where it's not even your money, you're using their pretend money with real live trades. I don't know how much easier you want this. I can't possibly offer you any more of an easier way to make this experiment and find out for yourself whether it's worth your time. It is worth your time to investigate whether it's even going to work or not. If you're not willing to do that, well, then you have a loser attitude. You don't want to win. You don't want to advance yourself. It's okay. There are people like that. If you are a defeatist, stay a defeatist. It's for some that's the way it is, but for most of you, I'm sure a very high percentage of you who are watching this old man talk, you want to make this work for you, and you can. And in any event, I get emails from people who tell me, I can't believe how much money was generated from doing this. I can't believe I didn't know about this a year ago. I can't believe I didn't know this 10 years ago. This has been in existence since the 70s. Okay, I'm not trying to show you a new Vegematic way to cut vegetables that's just been invented by some scientist somewhere. The option writing has been around forever. It's the skill, the patience, and the knowledge and the awareness of how to do it. That is the trick of it. And it used to be you would hire a broker. You'd hire a stockbroker. And if the stockbroker was an option specialist, that person would then put together a conservative stock option writing portfolio strategy for you. We're gone. We these guys like me, we don't exist anymore. I'm 66. I can't get hired from a banker. Who would hire this guy? I don't want a job, by the way. I don't want to be a broker anymore. I'm 66. It's over. There are no 25 and 28-year-olds out of college going into the options market as specialists with brokerage firms. Brokerage firms don't want these guys and or girls. What they want is they want you to trade yourself. They want you to open up your own account, trade on their platform, and they want you to make all the mistakes and all the wins and all the losses yourself. They don't want to provide you with any services whatsoever. They want you to just trade through their computer. That's it. And they get a slice of the action on every trade you make. It's really simple. It's the McDonald's principle. We sell Big Macs cheap, but we sell lots of them. We have accounts, millions of account holders around the USA, and they trade themselves all the time. They just buy and sell and buy and sell and buy and sell. And we don't care if they make money or not, because we're not responsible if they make money or not. It's their decision to buy and sell on the open market. I'm saying to you, well, if you're going to do this, you better understand something. You're up against all the other investors out there who are opening up platform trading accounts. Tens of millions of them. And they're all desperate. They're all desperate to make money. And I mean it. They're desperate. You know these people. You might even be one of those people. Like I've said before, you have money saved up and you're looking at the calendar and going, oh my God, it's 2022. I'm supposed to retire in 2035. And there is no way in hell I can retire from anything because I have got nothing. I've got a quarter of what I need to make it. And even if I make 10% a year on my money for the next 10 years, I will not be able to retire as I had thought I was going to retire 15, 20 years ago when I started putting away money into the staff savings plan and they matched it and da-da-da-da-da-da. It's not there. Well, it's time to take this bull by the horns and run with it. And you've got to take over. And you are up against the desperados. Tens of millions of them, all right? There are not 15 people you're competing against. They're everywhere, and they're around the globe, all trying to make a go of it. And all you have to do, it is so simple. You have to be in the top 49 percentile to win. You have to be in the top 49 percentile. If you're in the bottom 50 percentile or 51 percentile, you're in the bottom half of performers. You're the loser. If you're in the top 49 percentile, you're in the winning category. What I'm trying to get you to do is get into the top 5%. What do the top 5% do the most? They have patience, they have persistence, and they've got knowledge, and they figured out ways to make it work for them without being risk takers beyond reasonable risk. And the key here is, if you're going to own stock like Apple, buy 100 shares of Apple, knock yourself out. 170 odd bucks a share, the most valuable company on the planet, making gobs of money all over the place. You can hold the stock and hope it doubles in price over the next 5 or 10 years. Way to go. And if you've put everything you've got into Apple, you got 50 grand, you put all $50,000 into Apple and it doubles in 5 years, yes. But there's a catch. How old are you going to be in 5 years? Have you got 100 grand now? Great. Are you going to retire on that? No, you're not. You cannot retire on that. Can you hold it another 5 years and hope it'll go from 100 to 200,000? Can you retire on that? In 10 years' time, you're not retiring on $200,000. No, it's impossible. It's not going to happen. So come back to step one. You're sitting on what? 30, 40, 50 grand worth of something, and you buy it all, put it all into Apple. So the only stock you will trust is Apple. Fair enough. It's okay. All right, so you do that. I say, why don't you learn how to write call options against that stock and have it generate income to you while you're holding it? You're doing the courtesy of holding these shares. Why don't you get paid to hold them? And offer your shares for sale to other speculators at a higher price for a limited time frame and be paid an insurance premium to do it. In other words, the option premium. And why don't you enhance your investment rather than trying to hold the stock and watch it go up and down and up and down and wave along and all that? Why don't you just start writing options against the stock while you're watching everything they do and following every news announcement they're going to make? You're going to be an option writer and start bringing in dough. If you can bring in, if you can bring in 3% a month on your premiums, 4%, 5% a month on writing options, not that hard to do. But I mean, even 2%, 3% a month on Apple. Your $50,000 is bringing you $1,000 a month right now in income. That's a start. And if you're just rolling that into more stock, your whole plan, remember Ghostbusters? What's your plan? Your plan is to just grow your portfolio and keep adding to the portfolio. And if you can add 100 shares of ownership in Apple over the next several months, you're going to write another option now. And then you're going to write another option. You're just going to keep rolling the dough back into Apple, because in 5 years, it might double in price. Well, instead of having from $50,000 to $100,000 in Apple 5 years from now, maybe you've got $50,000 to $175,000 in 5 years. And then 5 years after that, instead of 175 to 350, you've gone from 175 to 500,000 because you've enhanced this revenue source by writing options, constantly writing options against this stock. You're taking the time shrinkage and putting it into your pocket. You're compounding your returns and letting Tim Cook and his gang generate money like crazy on those products, and you're growing it out. And if the shares have a bad year and they stay flat, they don't do anything, they're 170 down to 160, back to 170, it doesn't matter. As an option writer, you are constantly bringing in cash as each option depreciates because you're writing 1, 2, 3 week-long options at a time, and you're doing maybe 20, 25 rollovers a year on your option writing strategy. This is how it's done, kids. This is what hedge funds do. It's what mutual funds do. It's what the pension fund operators do. All of the largest institutional investment firms around the globe do this with specialist option writers all the time with billions of dollars of transactions. I'm trying to get you to do hundreds of dollars of transactions, maybe thousands of dollars of transactions. You are not a competitor to these guys. You're not a threat to these guys. They're not going to pick on you. No, you're just in the market and you're a shareholder and you're writing options against stock you own. This is a very conservative, legitimate business. Used to be done by stockbrokers on your behalf if they were option specialists. But in the day that I was a broker, there were only 10-15% of the brokers who did this. Most of the brokers out there were just looking for the big home run ball. These guys were just as a manager, I would say to other industry insiders, these brokers out there, 60% of them are just as idiotic as their clients. They're looking for a home run ball to make it all work out. And they never found it. They never found it. I knew guys, girls, who bought Apple stock in the 80s and the 90s, thinking that when that stock took off, they would score the big touchdown. What they didn't understand was that Steve Jobs would be run out of the company, and that Steve Jobs years later would come back into the company, and the shares would have gone up and come way down, and it took a long time to go back up again. By the time Apple became the big winner, these brokers, these advisors, they had churned from 35-year-old people to 50-year-old people. Their clients, who were 30 to 60 years old each, were now 50 to 80 years old. Some of them had died of old age waiting for the payoff. It's not the way it works. You have to make your money every week, every month, every year. You have to get a steady return on your income, and you have to have a plan that is a multi-year plan, and you're willing to adjust from time to time, and that is what it's all about: discipline and patience. What can I say? Anyway, I've gone on enough. Thank you all so much for being here. It was a crazy week, and this week was another reason why you may want to consider being an option writer. This was a week where option writing was definitely had in some cases, came out very nicely. And next week could be another fun week as well. The beauty about writing options is that you get to do it again and again and again and again, time after time. Even when stocks do run up on you, you just do rollover strategies on your call options, which I teach in my courses as well. And you'll constantly stay ahead of the market. You will constantly earn either capital gains one week, capital gains and cash returns from option premiums, or just option premiums in a week. You'll sometimes have capital losses on your stock values as they have a bad week, but you'll make that up with cash enhancement as options depreciate and cash in for you. I have so many happy viewers on down days. They go, I made money today. The Dow was down 150 points. I made money today. This is great. That is what hedge funds are doing. That's what pension funds and mutual funds and ETFs are doing as well to enhance returns to their investors. I'm just asking you to join the party. Come on in to the diehard party at the Nakatomi Tower. Welcome to the party, pal, because sometimes things don't go your way in the markets. And John McClain, you got to be a John McClain. You got to join. In any event, there it is. I want to thank you all for supporting this channel. Those of you who are members of this channel, God bless you all. Thank you for being hanging out with Bruce, chilling with Uncle Bruce member, or those of you who are gold members, these guys right here. If you're a gold member of this channel, thank you for backing us up and keeping us on the air. Appreciate it very much. We will see you on Monday. If you're a Gold Bagel member, I'll see you before 8:30 in the morning because there's a special show for you every day, Monday to Friday. The markets are open. But all the rest of you, I will see you at 8:30, Monday, Tuesday, Wednesday, Thursday, Friday. I'll see you all at 3 o'clock from Monday to Friday as well. And if you're a Gold Bagel member, don't forget, Wednesday night, 8 o'clock, prime time with Uncle Bruce, open Q&A. Ask me whatever you want about your account and how you're trading and your option strategies and what you're up to. And we'll try to help you out with that. It's just a service we offer these people. You back me, I back you. Thank you all so much for watching this broadcast. There's 139 of you here. Don't you have lives? I love you guys. Have a great weekend. Stay healthy. I'll try and do the same. And we'll see you next week, everybody. Goodbye for now.